It's great to have you with us, and I guess welcome to the family of sorts. Thanks for the time today.
Oh, thanks for having me.
What's the Comcast Ventures partnership going to do for you and for us?
Well, it's a unique partnership that I'm really excited about, and Comcast Ventures, and I'll be VP at the Catalyst Fund, and the Catalyst Fund focuses on entrepreneurs and founders of African American, Latin, and female founders, which is an underrepresented group, and we're focused on consumer and enterprise software companies and startups, and we have many people within the company that are from startup backgrounds and have expertise to help companies grow. And there's a lot of capital out there being spent by a lot of VCs, and we're trying to bring unique ways in helping these companies grow. We have a startup called, or not a startup, but we have an initiative called the Forecast Labs, which helps companies in unique ways grow in a different type of way, and just bringing more than just capital to these companies, but expertise in the fields and with helping them grow, not just growth at all costs, but responsible and sustainable ways.
Yeah, that's important. We'll talk about individual names in a second, but in general, can you talk about how many candidates you're seeing that make sense, and are you seeing valuations right now that make sense?
Well, the valuations are pretty high at the moment. You have to be cautious of just throwing money anywhere. You're seeing money going in different places, but I think we're being very strategic. The companies that we're looking at, like I said before, we have a lot of the team that I'm working with have expertise with growing startups and working with startups and being entrepreneurs themselves. So there's a lot of expertise that goes into it. We're seeing companies daily getting a lot of feedback, and that's something that I'm trying to bring to the table is leveraging not just my basketball talents, but my IP to get in the doors or get in these companies as early as possible. We're very early stage diagnostics with our fund and when we want to invest in these companies.
Andre, I believe you're on the board of Jamia, the e-commerce company that went public about a year ago. I wanted to ask you about that, because one of the things that concerned me when they went public, and I asked them about it, is they've got lots of logistics operations in Africa, doing a lot of business in Africa, but their engineers are in Portugal. I'm wondering, from the board perspective, are you able to do anything to get a company like that, perhaps other companies, to do more investing in talent and R&D and engineering in Africa, especially if they're doing business there?
Well, you're seeing a lot of funding going into Africa from other companies, or from other countries, excuse me. If you're looking at China, you're looking at the fintech sector. There's been a lot of movement and a lot of spending going into that area. And Jamia Pay is one of our, initiatives that we're pushing and getting a lot of the customers, a lot of the consumers, a lot of the sellers on that platform to use Jamia Pay, and how efficient it has been, and how easy it makes the process of moving goods and services within the platform. So that's an area that we've been continuing to focus on, and Africa is one of those countries that a lot of people are trying to tap into, because it's a market that's going to continue to grow with so many people being in the country, not just in the country Nigeria, but within the continent of Africa. And there's a lot. We've been doing really well within the last quarter, and it hasn't quite shown in the stock price, but I think we're moving in the right direction.
Andre, you're invested in so many companies. Many of them have actually already gone public. But Zoom, Datadog, PagerDuty, Casper, Jamia, Allbirds. Also, it looks like you have investments in Apple, Netflix, Alphabet, and Zynga. What's been your best one so far?
Oh, great question. Zoom. Zoom has done really well. Zoom, I have a great relationship with the CEO, Eric, and they've just been getting after it. It's shown in the stock price, but I think it will continue to move into, continuing to grow. Yeah. Also, Datadog has done really well with its tools in the enterprise software space. It just beat analyst expectations, and I think they just moved up expectations for the next quarter as well. So the enterprise software space is a space that I've grown to learn and grown to put a lot of my thought and effort into learning the space and playing catch up. Being a basketball player, professional athlete, you tend to not know about that space because it's kind of, it's not the sexy something that everyone's talking about, but in terms of growth, I think that's what's moving the tech sector more than anything else.
You're also invested in Casper. That went public here at the stock exchange last week. It's currently trading below the IPO price. I think the last round of valuation in the private market, it was $1.1 billion. Now I think the market cap's about $420 million. I wonder how you're assessing that investment right now, and also whether it will affect or color how you approach direct-to-consumer investment opportunities moving forward now.
Well, as you spoke about earlier, valuations are at an all-time high. With the market hitting all-time highs, and you have to be, I wouldn't say concerned, but you have to be a little bit more, pay a closer attention to direct-to-consumer. The space has become a little crowded, but I think you have to learn about what exactly your brand is, and I think Casper has the right idea in terms of not just being a mattress company, but being in the sleep economy, and how that's a much larger space than just a mattress. And you've seen it with a few other companies such as Uber. You've seen it with Lyft in terms of valuations and hovering around IPO price or just below it. But the overall stance with the company and being within the sleep economy as a much larger space and building something much bigger than what people are seeing early on.
Andre, I wanted to come at you with a question about winners and losers from a different angle. I'm looking here, Miami, the Miami Heat, first in the Southeast right now. Your former team, Golden State Warriors, play not far from where you're sitting right now, last in the West. I imagine there are a lot of people, probably maybe including yourself, who are wondering about the impact on your brand of changing coasts. What's your assessment on what that move has meant for your brand and how quickly things can change?
Well, that's just the nature of professional sports. You can move at any time, and then, you can move coast or any part of the region of the country. But I think, with so much technology out there, it makes it capable to be able to, sustain your brand, whatever it may be. And for me, companies like Zoom make it easier for me to tap in with the team at Comcast Ventures and, the Catalyst Fund to make sure that, I'm staying up to date. I'm able to be in the Monday all hands, all deck meetings to make sure that we're all on the same page. I can be at meetings at any given time from a different location, and, I'm full speed ahead.
Finally, Andre, Kobe Bryant was a guest on our show several times talking about Bryant Steibel, and he did say to us a few times that he thought that his investing career would in the end surpass what he had done on the court. I wonder if you feel the same way, the degree to which Kobe was an inspiration for you in business, and then how you intend on paying that forward to others.
Yeah, well, Kobe and I, we actually had the same agent throughout our careers. So I was able to see some things he was doing on and off the court, and I think vice versa. He was able to see some of the things that I've been trying to accomplish off the court. And, it's just, I think we both have the same mindset in terms of how we go about doing our business, and we take the same approach that we put the same intensity, the same focus that we put in on the basketball court. And, it's for the long haul. Like I said before, or like you spoke on, evaluations are at an all-time high right now, and we just didn't join the space for the vanity play or the sexy play, but we're doing it for long-term growth and understanding the process and kind of seeing the future. And when we go and look at companies, we're looking at 10 years down the road and not 1 or 2 years down the road. And, how can we help these companies grow not as fast as possible, but sustainable and, the long play.